The risk disclosures appearing on the screen are important for you to read and understand. Please pause the video now to read through the disclosures or listen in as the disclosures are read aloud at the conclusion of this video.
This is Don DeBartolo, a senior commodities broker with Daniels Trading in Chicago. I'm the editor of the Trade Spotlight Advisory Service. In this video, I will review the double bottom reversal chart formation and a trade opportunity it set up. Several conditions must have been met for this trend reversal formation to have been in play. Let's bring in a chart of the December 2012 lean hogs. The first condition is the double bottom. The double bottom was developed when the market sold off and created a new 12-month low at 70.05 on August 23rd. The market retraced and then retested that 12-month low. This was done on September 7th. From there, the market failed to surpass that low and rallied. The two lows create a support level, while the high of the retracement at 73.17.5 on September 5th create a pivot point or resistance level. While this formation is stronger if developed over weeks or months time frame, this particular formation was in place since the end of August. The second condition is a change in market sentiment. Since this is a bullish formation, we're looking for an opportunity to get long futures. That can only be initiated once the trend reverses to an uptrend from a downtrend. The Trend Seeker, a U.S. chart company tool that helps identify market sentiment, shifted to a uptrend on September 20th. As you can see from the chart, this was done after the market rallied through the pivot point. It is important that trading volume increases during the rally. This is the third condition, as it confirms a shift in market sentiment. And as you can see from the volume below, from the 12-month low through the rally, volume did accelerate. The double bottom reversal chart formation is in place once the pivot point is broken and the trend reverses. However, there may first be a pullback to the support level. As you can see, the market did pull back to 73.40 on September 28th. This is just 22.5 points away from the pivot point, which was previously resistance. At that support level, a long position can be entered. However, I approach this trade conservatively. A break of the 75.87.5 high on September 25th sets up an MET, or momentum entry technique. I previously produced a video on the MET if you're unfamiliar with this trading strategy. A break of this high triggers an entry to the upside. I recommended buying futures at 75.90 on confirmation of the double bottom reversal chart formation and the MET strategy. That order was filled during the October 2nd trading session. I placed my initial stop loss at 74.20 and my initial target was placed at 79.20. From there, I managed the trade accordingly and sent updates via the Trade Spotlight. If you're interested in trade recommendations based on chart formations and technical indicators, I encourage you to follow my Trade Spotlight Advisory Service. Happy Halloween and happy trading.
This material is conveyed as a solicitation for entering into a derivatives transaction. This material has been prepared by a Daniels Trading broker who provides research, market commentary, and trade recommendations as part of his or her solicitation for accounts and solicitation for trades. Daniels Trading, its principals, brokers, and employees may trade in derivatives for their own accounts or for the accounts of others. Due to various factors such as risk tolerance, margin requirements, trading objectives, short-term versus long-term strategies, technical versus fundamental market analysis, and other factors, such trading may result in the initiation or liquidation of positions that are different from or contrary to the opinions and recommendations contained therein. The risk of loss in trading futures contracts or commodity options can be substantial, and therefore investors should understand the risks involved in taking leveraged positions and must assume responsibility for the risks associated with such investments and for their results. You should carefully consider whether such trading is suitable for you in light of your circumstances and financial resources. You should read the risk disclosure webpage accessed at www.danielstrading.com at the bottom of the homepage. Daniels Trading is not affiliated with, nor does it endorse any trading system, newsletter, or other similar service. Daniels Trading does not guarantee or verify any performance claims made by such systems or services. Stop orders do not necessarily limit your loss to the stop price because stop orders, if the price is hit, become market orders, and depending on market conditions, the actual fill price can be different from the stop price. If a market reached its daily price fluctuation limit, a limit move, it may be impossible to execute a stop loss order.
This is I can't